It happened again. It happened again. Adam, what are you talking about? Guys, I've been saying for months and months and months now how this year we're going to see a sideways trajectory of the real estate market. And last month was evident that what I'm saying is true and is happening. You're going to want to keep watching to make sure that you understand what's currently happening in the real estate market for you, your friends, and your family. Also, guys, again, more windows of opportunities in today's market. But guys, you have to remember something. Windows close. Windows close. They don't always stay open. So make sure that you're staying engaged. Make sure you take some good notes or you listen closely, because I'm going to tell you how the market took a turn this previous month that many of you did not expect. What's going on, guys? My name is Adam Oduwumi. I'm the founder and CEO of Uprise Real Estate Partners. We're a local San Antonio, Central Texas brokerage here to meet your needs and keep you guys informed as far as what's going on. So let's jump into it. So we're going to be talking about our monthly market update for the month of March. Obviously, we're reviewing data from the month of February. So let's jump into it. In February, here's the biggest number. This was the biggest surprise that a lot of industry experts didn't anticipate, but we've been saying for months. In the month of February, we had a total sales of 2,287 homes that sold. 2,287. Guys, in January, the previous month, we only had 1,743. Yes. So while months and months and months, we had the market just getting lower and lower and lower in terms of total sales of homes, we had a spike in February. I remember talking to people last year and they were saying, oh, I'm gonna wait till February and March comes and the market crashes and buy a home. And I was like, guys, I don't think it's going to happen during that time frame. And look, we saw a spike in February. Guys, if you even listen to our market update from last month, we talked about how before the numbers came out, how we were feeling it with our listings, with our buyers, with our phone calls, internet. Like we were feeling it as a company, a spike in the market, and the data and the statistics show that. Now, here's what's also interesting. So in January, when we had 1,743 sales, that was a 30% decrease year over year. I mean, that was a 30% decrease from January 2022. In February, when we had 2,287 total home sales, that was only a 17% decrease from the crazy, inflationary market that we had in February of 2023. So again, 22. So again, what that's telling you is there was a spike. The market took a turn for the upward, and it'll be interesting to see, where we go from here. Okay, now let's go over the average price. So in the month of February, we had an average price of $365,678. That's 2% more year over year from last year. Now in January, it was still a little higher for average price. It was $369,668. So we saw total sales increase in February, but we saw the average price of homes still have a lower average. Now let's go over the median price for homes. Watch this, guys. Median price of homes, $310,000. $310,000. Adam, why are you smiling? Because if you don't remember, in January, it was only 308,000, right? It was a big decrease from from November to December to January. But guys, we saw another spike. The median price of homes actually increased just a little bit, but it increased. It pivoted for the upward. Again, reinforcing what we've been saying. So here's what's interesting about the stats I just gave you. It is reported that in February, we actually saw a 28% decline in existing home sales. So homes that are what we call that is resale homes. Homes where it's not a new home. Someone else lived there and they sold it to you, right? We actually saw a 28% decrease in the total sales there, okay? But what made up for the number? Where was a lot of the activity? There was a 28% spike in new construction home sales. 28% spike. So some of you may go, well, what's the reason for that? It's what I've been telling you. It's what we've been saying. It's this, guys. It's the fact that buyers on the market right now, they're number one, They're the ones that have a lot of buying power. They're looking for a deal. They want to feel like they're getting a deal, right? That they heard about what their cousin had to do last year. They heard about what their mama had to do last year to buy a home. And buyers are like, it ain't that market no more. Because, I'm not getting the same interest rate as I did like my mama. I'm not getting the same interest rate like I did my cousin. So I'm still willing to buy your home, right? I'm still willing to buy a home, but because my interest rate is now double, triple, whatever, I want to make sure that I'm making a wise decision and feel like I'm making a good decision. And to do that, I need to feel like I'm getting a deal, right? And here's what happened. Here's what happened is that home builders were willing to give buyers opportunities to get good deals, and home builders were willing to give buyers terms that made them feel like they were getting a deal. Where homeowners, traditional sellers, weren't moving as quickly. They weren't making the adjustments. Like we said, we still here. We go on listing appointments every week, and home sellers are still resistant to what the current market is. They can hear all the information. They can see all the data, but they're still resistant to making that move. Whereas home builders, you saw a 28% spike in new construction homes. It's because the home builders are saying, wait, you want to feel like you're getting the deal? Okay, here we go. We're going to give you some appliances. We're going to give you incentives, $20,000, $10,000, $20,000, $30,000 worth of incentives, and we'll give you money to buy down your interest rate. So your payments where you want it to be, or you feel like you're getting a better interest rate than other people out there in the market. That's what they're doing. And check this out, guys. What you're going to see in the data for March next month is that we're seeing that the homes that sold that were existing or resale homes, it's because those sellers were either willing to give a discount on the listing price, they were willing to either give incentives or closing costs to the buyers, and they're willing to give the buyer the funds necessary to do 2-1 down buy down rates, 3-2-1 buy down rates, things of that nature. So that's the information, guys. We tell you ahead of time from a strategic standpoint what it's going to take to make things move and happen and reach your goals, and then you see the data support that. Okay, we're not just coming up with these things. All right, let's keep going, guys. So we saw the days on market in February. The days on market was 70 days. Okay, 70 days. The previous month in January, it was only 66 days was the average days on market. I remember telling you guys where, hey, maybe we'll see 30, maybe we'll see 40, 50, we'll probably see 60. Now, we're looking smack dab at the number 70 days on market. So what does that mean? That means that, one, as a buyer, it's a good thing because now you have a little bit more time to pick the right home. You have a little bit more time to make sure you're making a good decision on the home that you're wanting to make an offer on and get under contract and purchase. As a seller, it's not terrible news, guys. Before COVID, this is normal real estate. Guys, we're not even in a full buyer's market yet. We're still trucking our way to a more balanced market, right? But 70 days, guys, most of you need to sell a home before you can buy a home. So this just gives you more time to make that happen, as opposed to, feeling like you're on a TV game show and you got 30 seconds to sell a house, buy a house, and make a good choice for the next 5 years, right? So this gives you a little bit more time. And again, if your strategy is sound, you're not going to have a problem. If your strategy sucks, you're going to have issues, okay? Let's keep it going. Price per square foot. For the first time in a while, guys, we don't have a change. It's $176 is the average price per square foot in the market, which was the same for the previous month. Months of inventory, we had 3.3 months of inventory in the month of February. In the month of January, we had 3.25. So not even a big difference there, guys. Again, I told y'all, we're not having a crash. This isn't 3 months of inventory, 4 months of inventory, 5, 6 months, 8 months of inventory. Oh my gosh, look at all the foreclosures, look at all the inventory. We're not having that yet, now, whatever you want to call it. So again, we're kind of staying in this slow snail pace trot towards a more balanced market, and there's opportunities in this, right? Okay, average rental rate was $1,804. This went up. This went up. The previous month, it was 1,000. January, it was 1,786 was the average residential rental. Again, in the month of February, it's 1,804. Rents are still high, guys. And we'll have some renters that ask us, they'll be like, well, do you think they'll drop a price? Do you think they're going to drop the price? They've been in the market for 2 weeks. And we're like, guys, that's not what it's taking. They're still holding out for whatever they want. And if they drop the price, it's not a $500 drop. It's not a $300 drop. No seller and landlord right now is really worried about the market crashing that much. When they do their drops, it's a slower pace. Just like you saw the market moving at a slower pace to a more balanced market, you're seeing the same thing in terms of pricing. So it spiked up a little bit there. So those who are looking to rent, right? If buying is not the right choice for you right now, then go rent. Keep renting. But just understand that rents, they're pretty much stable right now. And we'll see what they look like the next couple months. Guys, as far as the next statistics, new listings, active listings, pending listings, all of that, those remain the same. In the month of February, we had 3,531 new listings. 3,531 new listings. That's a 2% increase from year over year. Active listings, about the same as the previous month, 9,712. Then for pending listings, we had 2,407, which is very close to the previous year as well. So not much change there. We did see an uptick in the number, in the percentage of homes sold between 200 and 500,000, because in January, we saw a few more properties sell below 200,000. And so this previous month of February, with the uptick, because a lot of homes under 200,000 in San Antonio, for the most part, either aren't moving ready, they don't appeal to most buyers. They had a decrease, right? And so if you're an investor, like we tell most of our investors, January was a great month to try to grab some properties, right? Okay, so guys, those are your statistics overall for the month that I really wanted to focus on and share that information with you. Now I got a few more talking points I want to leave you with. So here's some things that we're noticing in the market as well. I mentioned to you earlier that if you're a seller and you want to sell your property, don't be greedy, don't be overzealous. But if you want to test the market but still make your home appealing to buyers, offer closing cost assistance. Offer the opportunity to help the buyer do a 3-2-1 or a 2-1 buy down with their interest rate with a great offer. That way it doesn't commit you to anything. If the offer you get in your eyes wasn't a great offer, then you don't have to give them that. So those are the things that you can do to make your home appealing to buyers in this current market. If you're on the buyer side, new homes right now, they're continuing to give good deals, right? Now, typically, are you gonna pay more for a new home than you would a resale? Because the builders know that, so they're kind of jacking up the price a little bit to give you those incentives. Well, yeah, obviously, right? It's just like anything, a furniture store, or whatever the case may be. But if you're someone who wants a new home, there's great opportunities to buy down your interest rate, get you closer to the payment that you want, and get you the new home that you want as well. And here's a great thing too as well. A year ago, builders hardly had anything in inventory. If you wanted to buy a new home, for the most part, you had to build and wait 6, 9, 12, 18 months, right? Right now, builders have tons of inventory. We just locked up another buyer this past weekend with an inventory home. And so there's plenty of opportunities there as well. From an investment standpoint, what we're seeing is investment opportunities on the buy and hold starting to come back, right? On the buy and hold side from a renter standpoint. On the flipping side, there's some opportunities, but it's really, kind of the exceptions or, those deals where not too many people know about them. But for the most part, where we're seeing opportunities from a buy and hold standpoint. I just want to leave you with this statistic as well. In the month of February in 2021, the median price of homes in 2021 was $260,000. Okay, $260,000 in February 2021. In February 2022, it was $305,000. In February 2022. In February 2023, I just told you it was $310,000. Why are you saying this, Adam? I'm saying this because assets typically increase in value over time. And so that's why I'm speaking to the buy and hold investors that this is your year. Last year it was tough. The year before it was tough because prices was just going so crazy and the rents couldn't keep up. Well, now with prices coming down and stabilizing in some areas, and rents also stabilizing as well, there's an opportunity for buy and hold to where you can buy assets this year and then over the next year, 2025, 2026, see prices start to come back up, see rents start to come back up, and there'll be opportunities there as your loan principals get paid down. So that's it from me, guys. I want to leave you with, there's some more things I could tell you, but we'll save those for some other videos. Again, if there's anything that you need from a brokerage standpoint in terms of buying, selling, real estate, investing, please let us know. Also, don't forget, we have our project management company that's in hot demand right now. If you're an investor that's local or out of town and you want some assistance in managing your renovation, you can hire our project managers to reach out to us for that. If you're a homeowner and you say, you know what, I manage the kids, I manage my job, and the last thing I want to do is manage some contractors for our kitchen or our home renovations, reach out to us. We'd love to help or consult, whichever is best for you. And I appreciate you guys. I love you guys. Thank you so much for watching, and we'll talk to you soon.